Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for April 6th, 2017. I'm Frank Ochoa, aka PivotBoss, and here's a look at the daily time frame of the ES. We're coiling up right now still. The previous session saw a major rejection, one-day rejection here, that led to a significant decline into 2340. That was significant. One thing we were looking for was a push into 71 to 76 half, 77 half. But I also mentioned that's about the zone that you're likely going to begin to see some sort of rejection. And price pushed above 70s, got as high as about 75s, and then failed to hold 70. And that's about the time where things started to really drop off. That failure to hold above the previous week's high also led to a move right back to the week's low, and that was 2340. So now that's where we are, and nothing really has changed. That's one big rejection day so far. We knew that there could be rejection. You can see this major volume ledge at 2380. So there could be more weakness ahead into this LVN for another retest. And again, as I mentioned, this still offers an opportunity to buy it and return it back toward highs. So at the moment, big rejection day of the previous session. Any retest back toward the previous close, so call it 2360 to 2358, that zone would be a great opportunity for bears to get on and look to continue to defend. But overall, still weak right now, but holding within the range, so there could be more chop back and forth before true expansion occurs. All right, here's the intraday chart. And looking at the intraday time frame, so far you can see here's the previous session's close, that white dotted line, boom, offered. And then price, isn't able to really extend this move downward. Instead, comes back below this low and starts to make its support and is now squeezing back above the previous close. So right now, short term, that's indicative of a return back toward 55s, perhaps as high as 57.5 where the previous week's close is. But any return into this previous close may be an opportunity for bears to look to defend and return it back down. Value is much higher though. So right now, a little bit of a flow higher as long as price can remain above 45.5. Any pullback into that zone could offer a push into 54s and perhaps into 57.5. All right, let's take a look here at crude. There's intraday crude rallying back toward 51.50, and right now 51.50 is resistance at the moment. I'll show you why. If we look at the higher time frame first, this was an important move yesterday. We had a major rejection, and we knew the zone to watch. And I mentioned before, once we get into 51.71 and 52, now that we're in that zone, now the market may begin to see signs of rejection. And it didn't take long. The market pushed up in that area, and then right when the EIA report came out, it slammed down through 51.60, 51.50, and then began to make that zone resistance the rest of the day. So I mentioned to our traders 51.50 would be a zone where bears would like to defend here in the upcoming day, and that's kind of where we are right now. The market has rallied overnight into that area, and now bears are starting to climb on board around 51.50s. What I mentioned before is because this up move right here was so strong, bears coming in to defend here are going to have their hands full because these bulls have been fed pretty good. So I'm not convinced that we're going to get a huge rejection just yet that looks like this, but we have seen a nice reaction in the area. And if two-day lows can get broken here, right back below 50.60, 50.50, it could open up a nice little swing move back toward 49.50, for example. And then that could still be an opportunity for bulls to defend and retest 51.70 and perhaps climb even higher into 53.40. So that's kind of my path right now, is looking for signs that we're going to continue downward, but then watching for where the rejection will occur for a response. And right now we'll watch 51.50 for signs of absorption today. So looking at the intraday time frame, here we go. Again, the previous week's close is here, previous session's close is here. Bulls made it support, and we've seen a clean market structure up. And now we're hitting the 5150. That's also where R3 resistance is. That R3 band is the third standard deviation of VWAP, and right now that's resistance. So right now bears are trying to keep 5150 offered for a return to value short term. That would be between 5113 and 5116. Given the uptrending market, bulls will want to defend 5106 to 5116 for a return to highs and try to push through 5150. All right, let's take a look here at gold futures. All right, here's a look at gold, and right now what you see is very similar to crude oil. We were looking for price to reject between 63.20 and 64.90, and that's what we got. We got that on Tuesday. Price rejected, and so what I mentioned is any return to 1260 should be defended over the next couple of days. Yesterday it came right into 1259s and sold off hard, right back to 1245s. Big time move. And then today we've already seen price come into 1260 and again get rejected. So at the moment bears are still up here defending the previous week's high, but the downside is limited at the moment. 1240 is major support right here on a short-term basis, and that's where bulls could come in and redefend. Now if there's any violation of 1240, then all of this energy right here will release itself downward, and that's when you get the move to 1200. So we're going to see which way this energy can get released. We got a nice little range here at the top end of the trading range. That usually leads to this. But again, 1240 is the key level. Any major rejection could spark a push through these highs. So that's going to be the major pivot to watch here as we move forward. Now, lastly, we'll take a look at the NQ. This one here is still bullish. We had a major rejection the previous session. One thing I mentioned pre-market was that bulls were defending the previous week's close and price was testing the previous week's high. I say pushing through that high should target us into this target right here, and that was the R25, so the 25% weekly expansion target, and that's right there at 54.86 half, and price got within 5 handles of that level and then saw a major rejection, a huge rejection, all the way back and ran the stops through the previous close and lower. So what a move. And then we got back to the FOMC level from March 15th, which is the 53.9575s. That's where bulls are defending. Despite, again, a major one-day pullback, this market remains very bullish. Stacked and sloped. If you look at the pivot-based EMAs, this thing is just continuing to push higher. So a pullback like this, wherein it takes out the week's low right here at the mid pivot for the week, and then is already rejecting back up, implies that this thing is ready to go right back up. So right now, bulls are still defending, and I think off of this support zone right here is very important. So any pullback into that zone, and that's about 54.05 to about 54.10. That's the general zone there where bulls are looking to defend and try to return these to highs, 54.50 at the very least. So something to watch out for. Despite the major sell-off yesterday, the NQ always seems to rebound very nicely. Now if you look at the intraday time frame, there we go. You'll notice right here that off the previous, look at how the market dropped down into this 53.9575. That's the FOMC level from March 13th. Look how price dropped below it. Held, it made it resistance, but they couldn't get paid. Those bears didn't get paid. So when price pushes back above it, it becomes support, and then it's done its thing. But it was all rejecting off of this level right here. And so right now, we're back above 54.13. I mentioned any pullback toward 54.05 to 54.10. That zone right there offers an opportunity to defend for bulls for a squeeze back toward new highs. All right, that's it for now. Let's see how this plays out the rest of the session. Good luck and trade well.